morning, UPBOptionMillionaires.com. It's September 4, 2018. Welcome to September. It's a Tuesday, about a half hour before the opening bell. Real quick over some charts here. The market is down 0.2% here in the S&P 500 futures. The action started at the downside after the European markets opened for trade. Futures were higher over the weekend, but yes, pulling back here, we're down almost 0.2% under that key 2,900 level. We came down to a support level that held late last week, and we bounced off it here. Is that going to hold? Is this going to catapult us to new all-time record highs this week as well? In September, you can see the support line here, 2892 on S&P 500 futures. And you look at the all-time record high that we saw in the middle of last week, not far away from it. And, you know, we start off a negative move to start the month. Well, look at this from a long-term chart perspective here, just over the last 2 years. On a monthly perspective, what are the odds September is going to be one of those red months? I mean, if you look at this chart, pretty slim. And if you look, the red months coincided with just a massive move to the upside, which we could be just an early 5 months in, 1, 2, 3, 4, 5, which would imply if we go judge what's happened over the last 2 years, we have an even more robust move to the upside waiting in the wings. I don't think the SPY got to 290.31 without hitting that 300 level. Also look at the NASDAQ QQQ. Breaking out to the upside, not really a lot of red candles to be found. And you can see the breakout is really starting to take hold here for the QQQ and small caps. IWM also a huge move to the upside in August, breaking out after, you know, pretty mundane price action after it hit lows at the start of 2018. So let's look at some charts to watch here. GameStop reports earnings on Thursday, I believe, and some calls, and I think it's going to head to the upside. If you look from a longer term perspective for GME, bouncing off an all-time, well, actually it hit a new multi-year low earlier this year, but it's bouncing off a 15-year support line here. Actually, go back to 2006, so about 12-year support line for GME, bounced off it earlier this year when it hit its lows. Looked poised to break to the upside, and what a nasty decline we've had over the last week and a half, dropping from 17 and change to 13 and change, and if you just look over the last 30 days, pretty nasty drubbing for the longs. But I do think it's going to reverse. If the earnings come out as expected and the company continues to maintain its dividend, I think it's very bullish for the stock, and I think it's going to head higher. Some other stocks to watch, TXMD, which is Therapeutics MD, breaking out. It's been up much like the SPY over the last 2 years. If you look, the TXMD has been up 10 straight trading sessions, back up to a level it saw just before its dilution was announced at the end of July, start of August. I think once it breaks out, and I'll pull up a longer term time frame here, you can see it's a beautiful wedge here. Once it breaks out of this wedge, I think it's going to head up into the double digits, and that would put every single one of the 50%, almost 50% of the short interest underwater, shorts underwater, because it did break. Now, assuming every single one of the 40+ million shorts initiated as short positions right at the start of 2016 when it was over $11 a share, then all the shorts are doing well right here, but not so much, because if you look back in October of last year, down here at this level, a lot of the shorts, over 10 million of the shorts were initiated here. Short interest grew almost 15 million shares. So that's between 450 and 550. We're at 650 now. So a lot of shorts already underwater as we continue to rally. That's going to put some pressure on it, but I don't think this is a short squeeze stock. This is a no FDA approvals, nothing going on for the last 5+ years for the stock as it stayed in this range. Look at this. The stock is actually lower than it was back in 2015 and 16 and 17 when the stock was didn't have any FDA approvals, was diluting shareholders. And now that we have possibly 3 FDA approvals this year, momentum starting to build, and I think this is going to be a stock to watch, not just this year, but in years ahead. A stock that I think is breaking out. Analysts came out this morning neutral on the stock. I look at this one as just breaking out, just starting. And we'll see who's right here. But if you look from a long-term perspective here, this wedge, you go back from even the 20-year chart perspective, you can see this wedge, we're breaking out of it here. I think we're going to see back in the 40s, the 50s, and something to the likes that we saw back before the financial crisis in 2007, 2008. Not as robust up into the hundreds, but certainly a move that people are going to be talking about. Much like if you look at AMD, and I brought this up in the chat room, someone will watch, well, when's the top end for this market? Look at AMD, rallied up into the internet bubble, rallied up into the financial crisis after being, subdued. Look at these levels Heading into the financial crisis, 25750 a share, 25750 a share. Where were we just recently? Heading in 2016, 25750 a share, and now breaking out. So I think AMD has a lot more room to go to the upside, draw a trend line across that lands you just about at $40 a share. And perhaps that will be the top for the market. I know it was the Alibaba top a couple years ago when Alibaba was $40 a share. The Twitter top when it IPO'd. Facebook was the top of the market. Well, how about AMD, which really is kind of, the timing's off by many, many months, but for the most part, AMD has started to pull back for the rest of the market leading into the financial crisis and also the internet bubble. Some other stocks I'm watching. How about Switch, with that after it reported earnings collapsed? This is a recent IPO, and if you look, a big gap down after its reported earnings, but I think it's turning around here. There was a filing out, ownership document reporting a new 14% stake in the company, so I kind of like that. And we could possibly be breaking this downtrend, but at least coming up to fill this gap here at 14. Let's see, there was other stocks I wanted to talk about, but my brain is just gone. In light of the news, Nike is falling here pre-market. I think we're going to see a bit up Under Armour shares. Look at this possible inverted head and shoulders pattern. Here we have a shoulder, and the head, and a possible move back up to 30. So this is something to watch longer term, especially if Nike continues to weaken. And if you look at Nike for the downside target, you can see it about they come across about $70 a share. So significant possible downside here for Nike. On its move after hitting record highs, possible move back to the 70 level. I think I'd be more confident in playing for upside in UAA, Under Armour, for a move up to 30 over the next couple months. All right, that about covers it. The market is going to open in less than half an hour. It is Tuesday, and it's a holiday shortened week. It's the start of September, and again, pretty much every month since the lows in February 2016 have been green. So the odds that this red start to the market is going to have any kind of lasting effect, the odds are slim. And I think we're going to head over $300 a share on the SPY heading to the end of 2018. UPBOptionMillionaires.com. See you in the chat room. Remember, have great trading.